Hello, everyone, and thank you so much for tuning in today. Good morning or afternoon, depending on where you're tuning in from. I'm personally on Eastern Time over in Florida. So, on today's webinar, we'll be going over farmland investing with a self-directed retirement plan. A quick disclaimer before we get started. The InTrust Group or InTrust does not provide any investment advice. We don't endorse any products. All information and materials are always for educational purposes only. Every party is always encouraged to consult with an attorney, accountant, financial advisor before entering into an investment decision. On today's agenda, we will be introducing LandFund Partners. Thank you for coming today. Farmland 101, analyzing historical performance of farmland, learning from land fund's strategy, reviewing energy and water rights, and then always, as always at the end, we will have a Q&A to answer any questions that have come up. A little bit about me. So my name's Rachel Stolrow. I have been with the InTrust Group for almost 10 years now, so quite some time. I love to educate investors and professionals on tax-preferred retirement accounts, so very much like this. We here at the InTrust Group, we are self-directed retirement administrators or IRA administrators. We have very knowledgeable staff that is most of us have been doing this for quite some time now. Many hold a CISP certification, and very much like this one, we host monthly educational webinars. We are very big on education. So whether you're calling into us, speaking with us directly, or whether we're hosting a webinar, we love to provide educational content. We have over $5 billion in assets under administration, over 40 years of service. So we have been doing this for quite some time, in totaling over 24,000 active investors. And we always provide every company and client with a single point of contact. We say single, but it's really a team of two to make sure that everyone is taken care of through their self-directed retirement journey. All right, so without further ado, I'd like to introduce Chris Morris at LandFund Partners.
Great. Thanks, Rachel. And thank you, InTrust Group, for the opportunity to share a little bit with the audience today about farmland and how it can help protect your retirement capital. My name is Chris Morris, and I'm with LandFund Partners. Before we get started, a little bit of a disclaimer from our side. This presentation does not constitute an offer to purchase securities. Every investor needs to consult with their advisors, read the prospectus, and we will have an opportunity later if you'd like to express interest in learning more about LandFund Partners. So quick background, I am Chris Morris, president of LandFund Partners. I helped start the firm back in 2013. I'm from a small town in Kentucky, grew up around farming, and really with my business partner, John Ferris, through the great financial crisis, we were studying ways that we could help high net worth investors and retirees diversify their portfolio to own U.S. row crop farmland, which can be a tremendous tool to help reduce drawdown risk and protect your purchasing power. So if you're a farmland investor, you're in good company. I'd like to start with this story about Warren Buffett. So 15-year-old Warren Buffett did not start out by picking stocks, obviously one of the greatest equity investors of all time. But one of the first things that he invested in was farmland. So 15-year-old Warren Buffett had saved enough money from his newspaper route and other jobs to actually acquire 40 acres of farmland in Nebraska, where he is from. So it didn't take a super experienced investor to understand that it has strong fundamentals. The fundamental value of farmland is that it is a finite asset. You can touch it, see it, it's tangible, and it grows something of value, food, fuel, and fiber for the real economy. So we think there are three primary benefits. There's certainly more, but these are the three primary benefits of farmland ownership. So the first is income. So one of the ways that you can generate income from farmland is by leasing it out to farmers. And then in return for leasing the land, you receive a rent. That can either be a crop rent, a cash rent. There are actually blended rent arrangements. But that income that you receive from farmland, those payments are extremely stable. Even in difficult economic environments, people have to eat. Our world needs the food that is coming off of a finite amount of farmland, and the yield, the income from farmland is very reliable. The second way that it can benefit investors is through appreciation of your principal of your investment. Farmland is finite and demand is increasing. There is just no way to create more farmland. And we've actually started losing farmland in the United States due to path of development and solar farms. And then if you overlay on top of that, farmland that actually has access to abundant fresh water supplies, it is decreasing. So when you look at the data of farmland real estate, the USDA actually tracks this and has been tracking it since the year 1850. But if you just look over the last 100 years, since 1926, US row crop farmland real estate has appreciated at 4.3% annualized growth rate. So that's been very consistent over time, and there's a limited amount of farmland with increasing supply. And then the third thing, and part of the reason we want to talk to you, especially in today's environment, is true diversification. So farmland returns are non-correlated to nearly every other asset class. So what does non-correlated mean? It means that what farmland does on a return, the returns of farmland on an annual basis don't necessarily move in lockstep with other assets. Why is that important? Because you can still generate strong returns while having a different risk profile and respond to different risks in the investment world. You don't want all of your investments to move in the same direction at once because that can lead to significant drawdowns and hurt your ability to achieve your financial goals. So you want to be truly diversified across a number of different asset classes. So, given some of those factors, many of you are familiar with what's been happening with gold and silver. Farmland is often referred to as gold with a coupon. It is a real asset, it's tangible, shares a lot of those same characteristics that gold has, but it also produces annual yield through that farmland rent. You actually receive annual income, and that's why farmland is often referred to as gold with a coupon. It is actually also a great inflation hedge. So farmland has actually tracked inflation even more closely than gold over the last 50 years because food is actually part of CPI. Food represents 14 to 15% of the CPI calculation. So there's an inherent linkage with preserving your purchasing power and hedging against inflation, much like gold. If you look at how dig in a little more on how farmland's historical performance has done, we want to zoom in on two specific periods of time. So most of you on this webinar were investing through both of these time periods, the dot-com bust of 2000 to 2002, and also the great financial crisis of '07, '08, '09. So we really got into farmland. Again, we've been doing this since 2013, but we studied it through the great financial crisis and we're just really impressed with how farmland was a reliable source of return, even when equities pulled back. We're not saying that we think an equity drawdown is imminent, but there's certainly a lot of similarities with the dot-com era, with what we're seeing right now as it relates to artificial intelligence build out, valuations of stocks, valuations of private businesses. And we think that the next time there is an equity drawdown, our view is that we feel confident that US row crop will continue to perform as a steady store of value. And that's because the demand for farmland, again, is inelastic in economic terms. The demand for food on a global basis, food, fuel, and fiber, is very stable, and people have to eat regardless of whether equities are high or low. There's still heavy demand for farmland. Digging in a little bit more on historical correlations, and can certainly answer individual questions about this later or after the presentation. But you can see here, U.S. row crop farmland, it's a little small, but has generated about a 10% annual return over the last 30 years. So it's the average annual return. That includes both appreciation of the farmland and the rental cash flows that come off the farm. And it's done so with much lower volatility. Volatility is on the x-axis. You compare that to the S&P 500, which has had higher annual returns over the last 30 years, but has done so with much more volatility. So when you think about having a more stable asset in your portfolio, not watching a ticker go up and down all day long, and knowing that you have a real tangible asset, farmland has been reliable over the last 30 years. Further to sort of AI proofing your portfolio, farmland has a negative correlation with both the S&P 500 and the NASDAQ, which is particularly tech heavy. So, in common, lay terms, having a negative correlation to the NASDAQ means if the NASDAQ goes down, then more than likely you would expect for farmland to be going up, which is a positive way to hedge some of your exposure to equities in this current investment environment. So moving on, there are different kinds of farmland. At LandFund Partners, we focus on row crop farmland. So row crop farmland is defined as land where you can plant crops and switch them annually. So whether it is corn or soybeans, cotton, peanuts, if you plant a crop in 2026, then you can go in 2027 and actually plant a different commodity and switch. So those are called annual row crops. Those are different than permanent crops. Permanent crops are primarily on the West Coast. These would be establishments like vineyards, almond farms, pistachios, orchards, and these require a longer capital outlay period. As the name suggests, permanent crop, maybe not completely permanent, but it's very hard to remove an almond tree, for example, and then switch that into pistachios the next year. Typically, when you plant that tree, it is going to stay with that one commodity. We don't do that. There are certainly experts that do invest in permanent crop farmland. It's a little more operational heavy, and we don't participate in that at LandFund Partners. And then finally, there's also pasture land or rangeland, ranches, right? Many of you are familiar with Yellowstone, John Dutton, right? Those sorts of big farm ranches in Montana with cattle and dairy operations. There are certainly ways to monetize farmland through those endeavors, but not something that we do here at LandFund. We focus on one particular area of the country called the Mid-South. So the six-state region that is outlined in green on the screen. And we settled on investing in this part of the country, and there are positive attributes to many parts of the country, but we felt really confident investing here for four main reasons. So the first is crop diversity. The second is that much of this area has a tremendous amount of groundwater. The third is the relative value. We're still able to buy land here at about half the price of Midwest farmland. So you can get to scale faster with fewer dollars. And then also local relationships. As I mentioned, I'm from Kentucky. All of our farmland investment team is from this area of the country. And a lot of farmland is local knowledge and having a good reputation and being able to find off-market investment opportunities in the area where you focus. So to touch a bit on crop diversity, people have asked us, why don't you buy land all across the United States? We actually think that we're even more diversified than simply buying row crop farmland across multiple parts of the country, because you can own land in 10 or 15 different states, but If you have the same soil types and it is just corn and soybean land, then you really aren't that diversified in terms of the crops that can be grown. In the Mid-South, where we focus, we currently own about 50,000 acres of land, roughly $400 million of assets in this area of the country. We have rice, soybeans, peanuts, sweet potatoes, cotton, grain sorghum. There's peanuts, wheat. There's a wide variety of crops that can be grown in this area of the country. So that's important because the farmer can switch the crops annually and find the most profitable option to grow on the farmland. Water is a big deal. It was a big deal when we started back in 2013, and the water situation in much of the country and even the world is even worse than it was then. So, California, as an example, has depleted a lot of their irrigation wells. The farm economy there has had to really expend a lot of money on water rights. Um, there are other aquifers in different parts of the country, but the Mid-South, we think, has a big advantage because of the Mississippi alluvial aquifer. There are roughly 300 years of groundwater available, and that's based on U.S. Geological Survey well data and then how deep the aquifer is. And what makes this really unique is that the Mississippi River flows right through the middle of it. So you can think of an aquifer almost like a big underground bathtub, and water can be pumped out to irrigate the farms. And then the Mississippi River annually, with its water levels going up and down, almost refills that underground bathtub. And it's a unique part of the world and a very reliable source of water. 93% of the farmland that we own is irrigated. And we think that that's really important to having a successful farmland investment. So whether it's in this region or other parts of the country, you need to make sure that you have reliable water. We have a local team, so the local relationships that we have, our boots on the ground approach, you have to think about how you're going to manage your farmland investment. We do that internally. We have 5 members of our farm operations and farm management team who help oversee the farmers that lease the land. We typically lease out for a cash rent. We have very large farmers, up and coming younger farmers. People ask us a lot. Many of you have probably seen a Wall Street Journal article recently that really focused on the succession planning of older farmers. Farmers as a population, I think the average age is now approaching 60 years old. There are a lot of farmers that are in their 70s or even 80s. And people wonder, who's gonna handle the farm when I'm gone? And we actually provide a solution to that problem. We like to work with owner operators that are retiring because we can make them a fair offer for their farmland property. And then we lease that out to another local farmer, most usually a younger farmer who is up and coming and looking for an opportunity to expand their acres. So it's a win for the farmer that's selling. It's a win for the younger farmer that needs access to more land that we partner with. And it's also a win for our investors because we get to own a really high quality farm with a good operator. We source deals from many different places. As I mentioned, farmers, our current tenants, will bring us opportunities. Local banks who contact us and know that someone's looking to sell, estate attorneys. Many of the farms that we buy are from estates that don't necessarily have professional farm management knowledge. Maybe there's a relative that is leasing the land, but they don't really know if they're getting an appropriate market rent and not the highest and best use of that farm to necessarily stay with that family. So we're able to come in, fix the farms up, lease them out professionally, find the right farmer, and create value for our investors that way. We're very selective with what we buy. Typically, we see in our region of the country close to $1 billion of farmland annually. We underwrite that. We check for flood history, soil type, crop history. We compare it with regional transaction data. Again, an advantage of focusing on one part of the world is that you get very familiar with it. So we can see market comparable transactions and learn a lot about what's happening in the specific market where we invest. So typically we're looking to buy 40 to 75 million of farmland a year. That ebbs and flows based on deal flow, based on the price of land and the deals that we're able to secure. One of the things that we do is buy smaller farms. So we call these bolt-on acquisitions. Again, tying in with that idea of smaller farm operators or families that maybe still own 400 or 600 acres as a legacy asset. Maybe their grandfather was a farmer, but they've moved on. We actually focus on buying those smaller farms and then building them together into bigger blocks of land. And that's really attractive to the local farmer because we're able to lease them more acreage in one spot, which is more efficient for them. They can actually spread their cost across more acres and make their operation more profitable. So the way that you farm is also important. You can buy the land, but if you don't have a farmer that's going to take care of the soil and you aren't using the right practices, then you can actually erode the soil over time. We take the exact opposite approach here at LandFund. We focus on what's called regenerative agriculture. So we require through our lease agreements at least one regenerative practice to be done on every single farm. And why that's important is because we really think what we're doing is buying the soil. You can own the land, but if you don't take care of the earth, take care of the soil, and be a good steward of those resources, you actually have declining value over time. So you have to have a good management practice, and regenerative farming is something that we're really keen on. We've seen positive results as we've been doing this for many years now on our farm portfolio, increasing soil organic carbon, reducing water consumption, and fighting erosion. So that's the core of farmland is owning the soil, leasing it out, and having those assets appreciate over time. Now, from an optionality perspective, there's a lot of other ways that you can generate cash flow from farmland. So those would include renewable energy options such as solar and wind, mineral rights, water rights, recreational, so hunting. We have a lot of deer and duck hunting in our part of the country. And also environmental credits are a growing revenue source for owners of farmland. Specifically, we think that water rights could be a really important play over the next 5 to 10 years. It already is very important out in the western part of the country. We see that becoming a meaningful potential source of return over the next decade or so in the Mid-South. And then renewable energy is particularly interesting. These would be things like solar farms. So one example of this optionality of farmland, when we have built our investment portfolio of assets, we looked to buy really high quality farms with great soils, great farmers, high crop productivity, and diversity. We actually thought when we were buying these farms that the transmission lines, as you can see here, this is actually on the first farm that we ever bought. We thought these transmission lines were a bit of a nuisance. The farmer couldn't drive the tractor in a straight line. You sort of had to drive around it. Fast forward to today, we're starting to see solar options and solar farms become a significant potential source of return for our investors. We've actually sold one solar farm already for roughly 3 times the purchase price of the farm. And with the demand for energy that's happening from data centers, we think that solar, while it competes with farmable land, it can be quite lucrative to farmland investors. So certainly a lot more that we could dig in on farmland investing. More than happy to stay in touch with you after this presentation. If you would like to respond to the poll and hear more about what we do, then we can follow up with you. We also have an email here listed on the page, ir@landfundpartners.com. We have multiple people monitoring that inbox. And finally, if you'd like to stay in touch, we do have a newsletter. You can scan this QR code. We don't send a lot of information out too much. It's not going to be overwhelming, but once a quarter or so, you can hear what's happening in the farmland world. So with that, I will turn it back over to Rachel.
Thank you very much, Chris. All righty, let's wrap up here. So, when investing in any investment with a self-directed retirement plan, I always say it's 3 easy steps, and it's probably easy because I help clients do it every single day. And that's kind of the beauty of working with Intrust. But step number one, you would establish an Intrust retirement plan. Number two, you would fund your account one of three ways, through a transfer, rollover, or a contribution. And number three, you would direct us on where you wanted to purchase, where you wanted to funnel your money to. So what's next here at the Intrust Group? We'll be sending you a replay. So if you wanted to go ahead and replay this, you can do that. We also will have a March webinar, and next month we'll be doing hospitality real estate investments. So using data to make smarter decisions. So stay tuned for that as well. If you want any more information on self-directed retirement plans, you're always welcome to reach out to us. Like I said, we're here to answer any questions that you have. We have very knowledgeable staff, and you can also visit our website and our learning center. I would encourage you to do that as well. We have many, many great webinars and blogs that our marketing team has done a wonderful job putting up there to help educate investors. Alrighty, and now to the Q&A. So please drop your questions in the chat. We will do our best to answer what we can. I will read out the questions here. And alrighty, here we go. So the first question is, how does UBTI work with IRAs? So some investments may have unrelated business income tax attached to the investment, usually those that are leveraging money or have short-term rentals. We aren't tax advisors, so please know that. So number one, I would ask a company that you're investing in, because they would know best if it's attached to the IRA or to their investment, or ask your tax advisor. I don't know if you wanted to add to that, Chris.
Yeah, specifically, Rachel, we're also not tax advisors. Certainly want everyone to have their own counsel and advisors, but we do use a small amount of leverage in our funds at LandFund. So there is a small amount of UBTI that is generated. I know that there are threshold amounts at which you have to report that on your tax returns, but that's more of an individual and advisor decision. There's a small amount that's generated. It doesn't necessarily disqualify the entire IRA from being tax advantaged or anything like that, but it is something to walk through with your advisors.
Absolutely. All righty. Next question here. Is rent income an interest? A very similar question, so I'll skip that one. What is typically the smallest tract acre that could be considered farmland?
So there are, according to USDA data, if you have 20 acres in your backyard or 10 acres and you're growing tomatoes, or register it and make it a actual farm operation, then that could be considered a farm. In terms of maybe what LandFund Partners does specifically, we will buy as small as 100 acres. We're actually looking at a 120-acre farm right now that joins some of our existing properties. And then the largest acquisition we've ever done was about 6,200 acres. So there's a very wide range, but the average size farm, according to the USDA, is about 400 acres. Our farmers at LandFund typically farm around 8,000 acres on average. So much larger than your average farm operation is what we own. But we do like to buy smaller properties because we think you can create a lot of value there.
Next question. Does your company actually own 46,000 acres? If not, please elaborate a bit more on the scope of management.
Yes, so we have a number of different investment funds. We own about 46,000 acres, just over 46,000 acres of land in this area of the country. Um, and we actively manage all those assets.
Awesome. All right, looking to the next one. Um, I apologize if we can just ask. There was one about regional farmland. I'm not sure I'm quite following what the question is. If you don't mind just resubmitting it, I'm happy to then read that aloud and get that answered for you. Um, all right. Another one says big kudos on promoting regenerative farmland. So then the next question after that. So um AG gets a lot of subsidy money. Do you get that, or does the farmer, or is there a split? Um,
Yeah.
Seems like a
Yeah, it's a
confusion.
great question, and certainly something also that's in the headlines a lot. We have done a ton of research on government support payments for farmers. They've been very reliable, really since the Dust Bowl. There have been in the 1920s and 30s. In the 30s, I believe they started to put in place support mechanisms for farmers. That has continued to present day. Bipartisan administrations have, or different administrations, I should say, have all supported farmers. And we, as the landowner, we do not participate in payments from the government. I want to be very clear on that. We would actually be disqualified because of income limitations. So the farmers that we lease the land to, they are recipients of aid, whether it's ad hoc aid. There was recently $12 billion of support that was passed through the current administration in December that should be flowing to farmers soon. There are also a number of long-term support programs. So last summer, the Big Beautiful Bill Act increased one program in particular called price loss coverage, which is a really important program to understand. Essentially, it says that if the market price for a commodity falls below a set reference price, a floor almost for that price, then there's an automatic payment that is sent to farmers. And that's all done through the USDA and the FSA, Farm Service Agency. So very important programs. They're important to understand when you're thinking about making an investment in farmland. But as the landowner and as an investment company, we do not directly receive any government payments.
Thank you for that. Next question. How has the climate change affected farmlands in your area? How will the building of AI or cloud infrastructure affect farmland, specifically water usage? What is your exit strategy? And some of these, Chris, just a heads up, if it's a deeper conversation where, maybe you should be reached out to, please just shout that out and let them know that as well.
Yeah, sure. So, three great questions. Certainly can spend time individually on a call to answer those. I would say maybe just quickly running over them. So, climate, that is part of the reason long-term changes in climate or weather patterns, that's part of the reason that we invested where we did because of that groundwater aquifer system. As you know, if the world continues to get hotter, we think it's really important to have water to be able to irrigate the crops. You also have to have great drainage to then get the water off the fields. You don't want to have too much water. That can be a bad thing too. But yeah, we see climate being a longer term issue for many, many industries. Farmland is not any different, but we've tried to mitigate that a bit, specifically through our strategy in this one part of the country. Our artificial intelligence data centers, those are significant, and that's become a real hot button issue in many parts of the farm community. In our region, XAI has located their two huge supercomputers that train Grok. Meta is building, I think, the largest data center in the world in northern Louisiana. And a lot of the reasoning for that is related to being able to utilize the groundwater resources. It's one of the reasons that we think there could be a water rights conversation coming down the pipe in the future, because as these large companies start to utilize water, we think that the local communities will say, hey, why aren't we receiving any compensation for this natural resource that's being utilized? So AI and data centers are increasing energy demand and certainly an important trend in the industry. Regarding exit strategy, happy to talk specifically about that, maybe in a bigger context. But we do sell farms from time to time. As I was mentioning, we've sold some to solar developers. We're in discussions for a potential battery storage facility, and there's a number of liquidity options that I'm happy to talk about maybe on a separate call.
Thank you for that. Okay, so next question is, so with Farmland, how do you take an RMD in the future? So, you do not need to take an RMD from your retirement plan here at the Entrust Group. So, for example, if you were investing in Farmland, it was time to have an RMD. We do need your proper value to have that number reflected properly, but you can always take that at another retirement plan that you may have at a different custodian.
Yeah, and maybe
Um,
if I can just tag along there, Rachel. So we also do in one of our funds, we have quarterly valuations, so third party appraisals and valuations. So one of the things that we provide our investors is a timely asset value for knowing how much their investment is worth at a given time.
Perfect. Perfect. And one thing I forgot to mention, which a lot of clients don't realize too, because some clients may not have another retirement plan, is you can always do what's called an in-kind RMD, which is instead of taking cash, you distribute out the asset to yourself. So either all or a portion of that investment will now be yours instead of the retirement plans, without, physically liquidating the investment. Okay, what is LandFund Partners history of returns for investors since 2003? Again, Chris, please, if there are some questions that may need to be handled a little bit more in detail, feel free to have a call outside of this.
Yeah, sure. I think, don't want to trip any wires for the public presentation. We have a strong track record of generating mid-teen returns. We've only been operating since 2013, not 2003. Sorry if that was unclear on one of the pages, but we have a 12, 13-year history and would be happy to share that with potential investors. We pay an annual distribution. So there's a cash component annually. We have some investors that choose to actually reinvest that distribution. And then the majority of the return is from the increase in farmland values over time.
Awesome. Thank you. And Chris, I'm going to keep going through questions, but what I'm going to ask you to do, if you want to go back a couple of slides and have your contact information up, just because there are so many questions, we have a ton of questions to get through and there's so many good ones. I just want to make sure, perfect, that anyone that may want to reach out can reach out to you as well. Okay, going through some of the years. So, what research is available to take a deeper dive into farmland investing? So whether I mean through your company or just generally, where can clients find maybe research to take a deeper dive into this subject?
Yeah, so I would refer people to our website. We have a lot of information there about different insights, articles on different types of farmland. I'll say too, like everyone else, I've used Google and some of the AI tools out there, right, to ask questions and find resources. There is information on the USDA's website that would be, unbiased and provided by analysts at that government agency. So yeah, there's a lot of resources out there, and our website is certainly a good one. I'm also happy to answer questions. If people have specific questions, they can email this IR@landfundpartners.com. They can also email me directly. My email is cmorris@landfundpartners.com, and happy to point them to some other